Is that it? Is that your, can
Yeah,
I go
that's it.
now?
Go ahead. Good.
Okay, cool. So what you just basically posed there was the idea that a bubble can blow up. You're like, if
Mhm.
these things happen, the bubble will blow up. But you didn't actually
Right.
provide any evidence to any of these things happening, except for saying that, oh, data centers are getting cancelled. I can actually answer that question because I follow
Mm.
these markets, right? The data
Yeah,
centers
please
you're
do.
talking about were by Microsoft. Okay, they weren't cancelled, and we knew about them 4 months earlier before the the TD Ameritrade actually Algo gets
Mm.
post. They actually weren't getting cancelled. They just weren't using the. They basically get options that they can affirm to. So
Mm.
whenever you're doing like big capital investments, usually as a hyperscaler, you're going to make extra, right, than what you need to be just in case, right? So I think they believe they did, there was some on CoreWeave as well that they didn't place. And basically, what happens is you're like, okay, so we're going to make all these options, and we have the availability to call on them, and then we get this extra capacity, or we aren't going to if we don't need it, right? And
Why
that
are
was
we
what
not?
happened
Just my
with those.
question. Why are we
Because
not?
the reason was because Microsoft was the biggest supplier of inference demand to OpenAI, right? But OpenAI
Hmm.
switched to doing their own because they're making their own massive one in was it Texas, and they basically are switching the inference demand to their own local servers than they are making it to Microsoft. So Microsoft was like, oh, we don't need to build this data center, and we don't need this because basically what it
Did
was
you
is
see
they were leasing
OpenAI
energy.
announce
Okay,
that they're going to make a bunch of data centers?
yes, OpenAI did that massive. You remember that massive announcement where Trump came out? He's like 500 billion, right?
Oh
And everyone
yeah,
was like,
yeah.
"Oh,
I
they
thought
don't
that
have
was
500 billion,"
very interesting.
right?
I thought that was
Yeah.
interesting.
So
Yeah.
the actual the actual answer is they aren't doing 500 billion. They're doing 100 billion this year, and they do have the funding to do that, and the money has already been made. And if you actually track these things, you would know that you can
Mm.
look at you can actually go onto like satellite imagery, and you can see the data centers being made, right? And you can
Mhm.
actually see them being outquicked with cooling equipment, with energy, like
You see
a
the
power
GPUs
generator.
inside going off right now for AI
Yeah,
in the
no,
future?
actually, yeah, you can actually either see the GPUs being delivered to the place if you're that like tech savvy. But I mean, most of the time you don't really
Damn.
check it by
And
GPUs
why is the
being,
stock
do
going
it. You just
down
see.
then?
So the
If we
stock
know
is
all
going
this,
down because the
we all
president is
know it's
doing
going to
massive
be.
tariffs and starting a trade
Yes,
war. That's
yes.
why.
That is a
Yeah, but
very
you
big
you
problem,
just
isn't
went
it?
you just went on to the idea that they're going down.
No, it cut out.
Um,
You know,
You basically went the
a lot of
idea that
people.
they're going down because the AI bubble is exploding, right?
Yeah,
But I just said tariffs, and you're like, oh, that's where they're going down. So they're not
tariffs
going
are.
down
Yes.
with all the reasons you
What
said
if they
before.
were going down regardless of tariffs? You're telling me that the markets are reacting to tariffs maybe going in place or maybe not, like aggressively, or do you think maybe we know that this is a bubble and there's clear desperation in Nvidia?
Wait, so they're going down because the bubble is a thing. I say that
Yes.
tariffs are why they're going down. You're like, oh, so that's why they're going down. But now they're also going down because of AI bubble.
Do
no, I think when
you
he was saying, "Oh," I think he was being sarcastic.
Oh, are you okay? All right, cool. Okay, that makes a lot of sense. Okay, so the you're still okay. So the AI bubble is blowing out. Okay, so
It's blowing
what
up, yeah.
what has shown up? What the AI bubble is going? Nvidia just
So
posted report of earnings, and they've
don't
got
forget how
record earnings.
bubbles, yeah, and then it went down, right? But don't forget how bubbles work, right? Like if I'm telling you about we're in a bubble now, right, and
Yeah.
it's about to burst, you don't say, well, what's your proof of it being in a bubble, right?
Mm,
The whole point is we're in a bubble. So for example, in the dot-com bubble, not so easy to point to the dot-com bubble being a thing until everyone realizes it's a thing.
No, well, it definitely was very easy to point out that
Oh,
companies
it
were building
was.
massive fiber cable networks that were never going to be used in a realistic time frame.
Oh, but
Like
they
you could
did get
literally see
used.
them. Yeah, they got used 10 to 20 years later.
Right.
Yeah.
Just like AI infrastructure might be used 10 to 20 years from now.
No. That's okay. The all of the demand that's being issued to customers, for example, like all of the GPUs that are getting made today, like I said,
Mm.
about 40. Okay, I'm going to bring out numbers here, but they are not fully like accurate, but they're way better than most people can
Wait, hold on,
understand.
wait.
But,
Let's wait. This hold on. Just so we might not, or it might be easy to know when you're in a bubble, but it's not easy to time the bubble because, for instance, somebody who was correct in identifying that 2007, 2008, that was a bubble. Somebody who was correct in identifying that then tried to take advantage of that in 2000 would have went bankrupt. In 2001 would have went bankrupt. In 2002,
Right.
3, 4, 5, 6, all these people would have went bankrupt. If you hit it at the right time, but you can't know when everyone else is also going to realize it's in a bubble too, right? Because everybody's incorporating all the information from the market at all points of time. Blah, 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 right? Okay.
Cool. I totally agree.
okay, but that doesn't.
Listen, all I'm saying is if AI doesn't turn out to be as impactful, because right now we're promising the entire world and we're pricing in tons of future growth, then the bubble has
But
burst.
we're not pricing in tons of future growth.
We are.
Wait.
We
That's the thing.
are.
Don't hold on. Metalloid is very smart. Don't make retarded arguments, by the way. You know we're pricing in a ton of future growth in a lot of these AI
No,
companies.
we're
really...
not. We're not. That's not how it works. No, you don't understand this as well, Destiny. When you talk about this, okay? Nvidia is not priced on insane growth. They are priced at like 30 PE or like 35 PE, and they have literally the reason why it's priced at is because they are selling GPUs to the same
How many
amount.
years
Okay?
of
Back
growth?
in 01,
How many years of
stop,
growth
stop, stop, stop,
is
stop.
30
Hold on,
PE?
stop. Wait, hold on. Okay. When you say that, tell me if I'm right or wrong. You just said that we're not pricing in future growth. And then your example
we're not
of that.
pricing insane
Stop.
growth. Like
Fuck,
01,
can I finish the sentence? You can cut off Jake.
Okay.
Don't cut me off. I'm just kidding. Okay. You're saying that we're not pricing in future growth. Okay. Now, if I was a retard, I would say, oh, really? Well, what is the revenues of NVIDIA or whatever? And you just pre-counter that by going, well, NVIDIA is actually selling GPUs, right? Correct? Like they have real sales to show for their PE ratio or everything, right?
Yeah.
Okay. But are the sales of those GPUs to other companies, are those companies utilizing NVIDIA's GPUs and then the AI technologies in a way that's... Okay, so then right now, there's absolutely no, or there's minimal to no speculation, I guess, in any of these companies. NVIDIA is legitimately worth as much as it is, and people are legitimately getting every dollar out of, or a lot of the value out of all the investments they're making in all the AI-related stuff right now?
Yeah, in the large in all of the public companies, unless you're talking about even transceiver companies like networking, liquid cooler, all those companies are making actual very, very large amounts of money, and they have, like, Nvidia is making the same amount of net income, so like profit over everything, right? Then Google, right? Google, and they make I believe it's like 3/4 or like about 70% of sales that Google makes. So they like mess top line revenue, but they make more bottom line revenue. Okay, they have made a shit ton of money. That's why.
Sure, I know they're making money, but I'm just, are they making money based on the idea that, like, the people that are buying from them are also making money buying those services?
Yes,
or are
yes.
they just...
So
okay, all right.
Amazon,
Okay.
Google, Microsoft, all those companies are only building inference, right, to demand. They like if you go to any of the earnings call, any of the companies that actually buy for them, they only ever say they are supply constrained because they are only building to demand. They aren't building past demand. That's what happens when 01 happened, right? You
Okay.
had
All right. Stop. Okay, I
like,
believe you. Okay,
increase,
I believe you. Okay, go ahead. Okay, go back.
Do you believe that a $500 billion infrastructure investment makes sense for a company that may or may not have a business model later on?
I believe that you don't know what the 500 billion investment is.
I'm just asking you just straight up, like, is that number make sense? Does that number make sense to you? $500 billion.
The $500 billion thing is a like 5-year time frame thing. It's not like a individual. It's based on demand increasing along, and then you increase the capital
many
investment
years
along
of
time.
demand growth, right? Growth. We're expecting
but
to be able to
500
charge
billion
a bunch
investment isn't
later
real.
on,
Like
right?
it's I said before, it's like everyone was right in saying that they don't have the money to 500 billion. It's the same as saying like.
Okay, so if growth in these companies shrinks, AI growth,
Of course it does.
what
I haven't said no.
happens to the bubble? Is my question.
It blows up. Yes,
right.
but you're not giving any prescription here. You're just saying, oh, if
All I'm
bubble
saying
blows up,
is,
it blows up. Of course it does.
all I'm saying is, if we do not hit expectations, then the bubble is bursted. We're pricing in a ton of AI growth with no end consumer in sight. Maybe we get a bunch of productivity gains, but really all that should do is actually basically lose jobs for people, because less people can be more productive.
Hold on, wait. Okay, lump of labor fallacy. But so I think the issue is when we say bubble bursting, what the implication is that there's a massively mismatched, like, overvaluation going on of some particular segment of the market. Yes. But things missing expectations or just not panning out as well as they want. The difference between you two right now is how much is the current market overestimating the value of these things. And Metalloid is making the argument that they're not really overestimating it that much at all. And so if the quote unquote bubble bursts, there's just going to be a bit of a correction.
I'd say I'd agree with what you're saying, but I would say it depends on the company in terms of overvaluing, right? So, like, for example, we would agree that Tesla has been valuing in like insane growth forever, and it's never going to be able to actually provide.
So
that
I think
value.
Tesla would be, Metalloid can argue this, but Tesla is probably something that you don't put in any of your analysis because that is it's like the game stock of fucking Fortune 500 companies right now. It's just divorced from reality. But the problems or the meminess around Tesla is not related necessarily to the quote unquote meminess around AI, I think, right?
Well, that's
it's not even remotely priced around AI.
That's how they position themselves, though.
Also, to be clear, when I'm talking about AI, I'm talking about generative AI, not traditional AI.
Well, that might be how they position themselves, but if you look at how they engage in the market, like the products and services that they sell, Tesla's clearly not a player in that, right?
I agree, but their price.
No, they are, but it's kind of not really like how
Tesla's a major are you talking about XAI? Tesla's a major AI
no, no,
player right
no.
now?
It's priced like an
It's
AI
the
company,
idea
but
is
it's
like
not
you
one.
could say tiny is that like they're a player in that like FSD requires a
Wait, did you
massive
just call
like they
me
have
tiny?
100,000. It's just how we think, okay?
Kill yourself. Sorry. Okay, go ahead.
Like they have a massive. I think it's like 50,000 GPU farm. I'm pretty sure for like FSD, right? They still train models and still run massive models. Like XAI is the consumer-facing like OpenGPT kind of a competitor that Elon has, right? But Tesla still has a lot of GPUs for running stuff because AI is useful for
What if
what they are
Tesla
trying to build, right?
collapses? Would that be a first domino and a growth
Are we just
potential
gonna go
being?
like, what
No,
if
like
X
listen,
collapses?
man.
What happens?
Yes. All I'm saying is
That
you're
doesn't. You
expecting.
realize how that
Okay,
doesn't have
sorry,
any like
go ahead. Go ahead.
substantial like indicative value, right? All you're saying is you're just coming along. Like I've argued this for 3 years now. Like I've been a big
Mm-hmm.
proponent of AI being like generative AI, to be clear, being a big like movement and it making a lot of
Oh,
money for the last 3 years,
Wait,
right?
real
that's
quick for
And
exciting.
retards in chat that don't know. When we say generative AI, what does that mean?
generative AI. So there's AI we've had for like you
Talking
always
about
do this, right?
AGI,
You're
but
like
it's retarded.
you say we've had AI for ages, all right? That's neat, and like everyone says that
Stop. Hold on. You don't
generative
have to
AI.
use analogies with me. I'm not a retard. Just tell me what generative AI is. Is it?
Oh,
Are you
it's
talking
doing
about
that
like
for chat.
AGI
Oh,
versus?
okay.
What are you talking about? Are you talking about stuff that produces
Generative
like?
AI is like it's when you take a lot of things and you make something new with it, right?
Talking about
Oh,
Essentially,
AGI,
okay,
which
gotcha.
does make
Okay,
sense,
thank you.
by the
Okay,
way.
that's all I needed. Okay, cool. Go ahead. All right.
Yeah, it's like
Okay, go ahead.
LLMs.
You.
So this thing that doesn't exist is going to do what?
What exists? What doesn't exist?
Doesn't
Wait, are you
exist.
saying that
AGI.
OpenAI doesn't
AGI.
exist, like
AGI.
GPT?
AGI. 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 AGI does not exist.
Okay,
Continue.
I can tell you that if we thought AGI was going to be a thing, right?
Mm.
These companies would not be like
Well, they were
average
trillions
PE.
and trillions, right?
They are literally valued at
Like Nvidia
average
being worth
multiple.
almost as much as Canada.
I mean, it's almost worth as much. It was worth as much as the UK. So I mean, yeah, but that's GDP. That's every year, right?
Hey,
You
you know
realize
that
how that's
that
not
doesn't
how it
yeah, that
works.
doesn't sound like a bubble. It sounds fair value, not pricing in any growth and not pricing in AGI or anything else that might come along.
Oh no, it definitely
It's
is pricing in
it's
growth. They're
just
pricing
priced
in
in
growth, right?
it's just priced in at GPU demand infinitely being there forever.
Yeah, I would agree with that 100%. If we knew that GPUs weren't going to sell next
Did
year,
you
then
ever what if training GPUs, let's say it wasn't as hard as we thought it was, like
how much GPU demand do you think goes to training GPUs and running
sorry,
the
training
actual?
AIs. How many let's assume
No,
training
training
AI.
AIs. Yeah, I meant that. How much do you think goes
How
to like
much do I
training
think
AIs
goes to training AIs?
and actually like doing the running them?
It's a good question. That's more what I would love to hear from you.
You have no idea. That's
I
pretty
don't. I would
important
love
to
to
your
hear.
like whole thesis,
I
right?
would love to hear from you what percent goes to training and what percent goes to deploying AI products right now. Go ahead.
Um,
Oh, of course. You were about to give me shit, but you don't even know. So fuck off.
no, I do
Thank you.
know. It's
Oh,
around 10%. I
10%
was
goes
like
to
thinking
training.
whether or not I
90.
wanted to say it or not, but I mean,
10%.
yeah.
10% goes to training. 90% goes to using.
Yeah, around 5 to 10%
So what
goes
happens
to
if
training.
AI gets easier to use, like DeepSeek maybe? Hypothetically, I know you're going to say,
Well,
DeepSeek didn't do
every
this, blah
year it
blah blah.
does. Every so
Oh,
the
it goes to right.
yeah
So
no
then
the
theoretically,
way it works is it's called a scaling curve
I don't need
or
to. We don't need to go over way it works, but theoretically, if AI doesn't require 90% utilization, whatever bullshit, and let's say it just becomes a little bit more efficient on the current amount of GPUs used, then you don't need to build a new data center, right?
that. Okay,
Would you agree
you
with
do
that?
know how to understand how it works because you do not when you make these claims you are making them based on a very small subset of knowledge and then extrapolating them to infinity. Okay, what you're saying right now is true. Okay, it is a true thing, but then you are going to make a claim afterwards that is not true based on that thing. Okay, because it's not based in reality. Okay, the reality is yes, DeepSeek was a 10x improvement of the GPT 4.0, right? They
Mhm.
4.0, right? And that was a year later. And the reason why everyone actually thought DeepSeek was a good idea is because they had a bunch of cool things. But basically, the TLDR is every year the past model gets 10x cheaper to run. Okay, that
Wait,
is
can I
a
ask a
true
quick
thing with the scaling
question?
curve.
Wasn't the DeepSeek thing? Didn't that end up being like crazy overblown or no?
You say this, but it's complicated. Yes, it was, but it's also not. Like they did a bunch of cool things with like the
Well,
way they
no. When I
train and
say
stuff.
when I say yes, it wasn't that when DeepSeek came out, it was marketed as this like insane like 1000x improvement that runs locally, that is just like orders of magnitude better. But then in the actuality, it was better. It was an improvement, but it was like within an expected, like, oh, this is an improvement. Yeah, okay, yeah. Just making sure. So everyone said, okay, yeah. Because when DeepSeek first came out, everybody was like, oh my God, like 4 Chinese kids in their fucking subsistence farm just figured out how to do AI on like a Nokia. But it's not really that. Okay, yeah. But go ahead. But it's an improvement, but go ahead.
Yeah.
Okay,
it was an improvement. Yeah.
So I guess
so basically what I was saying is so every year, about a year, right, 10x improvement in cost, right, to the same model, right? But the thing is, the reason why we're building more and more GPUs is not because like we have massive efficiency gains and stuff like that. It's because we keep increasing, right, the performance, right? So what you do is you have the log scaling curve. This is like the meme of like 2020, right? Is you could increase compute, and then you would also get a log level of like increase in performance, right? And that was essentially the race. That was the rat race. When GPT-4 happened, right? Everyone realized in the industry, oh, we can spend 10x the money and get 10x the performance. And that was when it all like kicked off, right? That was when everyone started spending so much money. Hyperscalers came along, like, we'll spend billions on this, right? And then everyone was like, oh, we're reaching the cap of like the original log scaling curve, right? So now we need a new one. And that's when we had a bunch of different efficiency gains. The nearest term one was test time compute, which is essentially using more memory. Like you're asking the question, you're asking the AI to think before it answers you, and that's when you get all the memory of like, you know, asking the thing to think through its questions, right? So the reason why we keep spending on more GPUs and keep adding more stuff is because we keep building bigger and better models that can do more. Okay. Yes, if we stop doing that, then all of these GPUs purchased would stop, because guess what? You don't need all of the new GPUs, because you're not running more intensive models. Okay, you're just using the ones that you had before, which are going to get more and more and more efficient over time because we're going to work on them, right? But we're making bigger, better models, okay, with more enhanced stuff. And the best thing about this is we can see it happening.
Stuff.
It's not just speculation. We can
Give me
see
more
these models
enhanced
getting made.
stuff. I love enhanced stuff. Okay, here's the thing. I agree with you. Assuming we actually have AGI or some further thing later down the road.
Why does AGI need to happen? We already have. If you go back 3 years, we would never imagine what we'd have today. You can make fun of like there not being AGI, but we have huge gains in like productivity, in like using this for companies and stuff like that, like medical, transcription technology. All of that stuff is really really like pushed along by what we've done in AI. It doesn't need to be AGI to make us loads of money. It does.
Yes,
even if you have half of what AGI is, you can make tons of money.
I agree. Very good. Big things later. Not now though. Right?
Why did you just say that we like this all hinges?
Wait, hold on. Stop. Okay, you guys have a fundamental disagreement right here that you have to resolve. Okay.
Yeah, I have a question.
Wait. Let me wait on what I said or what he said.
No, on him.
Wait. Before we do that, okay, we have to resolve this. Okay. So Jake's statement, okay, is that all of this stuff that you're talking about hasn't materialized in the form of actual cash flow revenues yet. It's all still based on some technology that hasn't arrived. And Metalloid is saying that no, these things are already productive and they're already valuable to these companies in their current state. They don't need to get better. They can still get better, and that might even be priced a little bit, but they're already really, really valuable. So you have to resolve this disagreement.
Can you guys hear me?
Good job, guys. No, we hear you now.
Oh, okay.
Discord? Oh, okay.
I think it was Discord. I don't know. I actually missed like half of what Destiny said, but
Metalloid is saying that these AI products are already making a lot of revenue. Right. Jake is saying these products are not making revenue, and they're praying that basically AGI comes along at some point to make them worth the current investment, and that if they don't, that the value is going to plummet. So you guys have a fundamental disagreement on that you have to resolve. Okay.
Okay, cool. I agree with that assessment. So I guess I just want to ask you a question then. Let's say
how you guys have to resolve that disagreement? Hello?
I don't think we can.
You have to, because your whole.
Happen, though?
Well, I'm just saying that if you guys have
go through this and he's not going to agree.
But if you guys disagree there, then there's no point in going on, because that's like a huge.
I agree. Yeah.
Okay, so you have to. So what? So is there any?
Well, I can prove it. I can go along the company's statements. I can you can say they're lying or stuff like that, but I can go through the pure like actual earnings. Like I can tell you that from
how much of Microsoft's revenue is like AI products.
They said in their last earnings call, they said they'd had I think it was like 14 billion like revenue since
14 billion.
Yeah, which is really good.
14.
That's really good. Yeah, that's
How much are they spending on data centers?
so the okay. I'm going to pre-run this. Okay, the reason
Mm,
why the amount of money they're spending on data centers is more than what they're
okay.
earning is because it takes
Future growth.
time for a product to actually be used. Okay,
Yeah,
for
I
example,
agree.
Wendy.
What
Yeah,
if it
so
doesn't get used is my question, man.
Wait.
I
Stop, stop,
understand.
stop, stop, stop. Okay. So, Jake, when you say, what if it doesn't get used? When Metalloid is saying it takes time for them to be used, Metalloid isn't saying it
Mm,
takes time for them to be used by future technologies being created. What he's saying is that your return on investment is over some time horizon that
Yes,
accounts for the initial capital investment. So he's saying that without even future technologies, if you invest some X dollar amount right now, you're not going to recover all of your initial capital investment until you've had revenues plus some number of years, whatever that cash flow is. But he's not talking about future technologies. He's just talking about how long it takes to recover from your initial capital investment. Okay, so go ahead.
got it.
So then the question
Well,
is,
I
so
guess
okay,
my
so you're talking
argument
about
would
Microsoft
be
data
in
centers.
this,
Yeah, go for it. Okay.
yeah. In this regard, then I would say that makes sense. But if the consumer base that they require for the investment that they're initially investing in now isn't there, then they're in a lot of trouble, right? So we're just going to assume they have that, I guess, demand, that end demand that
okay, Jake.
justifies the GPUs that they're building or the infrastructure that they're building right now. But I just wanted to ask one question on what you said before. If there isn't more intensive GPU applications and the current workloads become more efficient over time, what does that mean? Like if AGI doesn't exist and our current AI products just become more efficient rather than, requiring more GPUs, you would actually require less to service the same workload. And theoretically, wouldn't that make sense? Because I imagine the biggest cost to them is electricity. So you would want to
Biggest
decrease
cost is not electricity. It's nowhere
in the
near.
long run. Why is
Oh,
everyone
in the long
investing in
run.
nuclear power then?
Oh, oh god. The reason why nuclear power is good is because to run
Mm.
these training centers specifically or inference is that you
Nuclear
need.
training is like not a big deal, right? But continue. It's only 10%, right?
Yeah, but okay. So the reason why it's really important. Most of these big nuclear power plants, and otherwise as well for inference, but mostly for the nuclear power plants, the near term ones is because training requires like 99% uptime. So
Mm,
like I don't know if you've seen any like the Grok ones, right? So they did this
mm,
funny thing where they basically have massive generators, right? And then they have like subcomponent generators. But they when you're training, right, you do massive like model switches. But if you actually like in that training, you're going from like 99% to like zero, right? So you actually blow up the generator if you do that. So what they did, oh, it's Meta actually. Meta did this. They basically had like a script that runs to keep the GPUs like calculating like random user stuff, so the generator wouldn't blow up. And they literally called the script like it's like a PyTorch script called like not blow up script. Like you can see it like it was actual thing, right? So you need
mhm.
like massive constant uptime for energy, and that's why they're doing big nuclear power
But they don't
plants.
care
The
about cheap
actual
energy?
no, but obviously they do care about because that's like a decent, like it's like a, I would say probably like a 5 to like 10% margin error for these companies,
Mm.
but like they don't really give that much on like a near term expansion. Like it's good for long term, and they will use it, but they'll happily make natural gas generators because natural gas is cheap as fuck in America, and it's also really good to be able to use if you want electricity and then don't want it. So for an inference thing, you can power
Yeah,
up
yeah, yeah.
more
I
if you're
get
going to
that.
get more energy. Yeah.
I get that. I guess my concern is, and I'm not sure if you answered it yet. And if you did, I'm sorry. But if efficiency keeps getting better, and rather than like higher demand, we get less demand on the current services, right? Like if efficiency keeps getting better, then the current data centers are less utilized, right? Just in general, especially when only 10% is used for training. By the way, my
Oh,
power
the
might go out. So if I get just disappear, that's what happened. But I'll come back.
yeah,
It's very
you are
windy here.
making
Fixed
the
labor,
idea
something.
you're making the idea that if X growth theory turns out to not work, then X growth theory stops, right? That's it's pretty
Yeah.
yeah, it's pretty yeah, that'll happen, and then you'll have efficiency. Like for example, when in the '01 bubble, right? Everyone thought that we were gonna have like every single person on like a personal phone or something like that in like 10 years, like everyone on the planet, like
Yeah.
trillions of people, and it took everyone was, but it took a lot longer, and the uptake was slower, right? But
Well,
like
no,
obviously
hold on. What he's saying is, so his assumption is there's X amount of work that needs to be chewed through with these GPU farms. But what he's saying is, what if that work becomes more efficient in the future, which would cause a decrease in demand for GPUs because now they can chew through all of the stuff and they don't need additional GPUs to do it. There's no
Oh,
additional demands.
you're
That's
right.
what
I
he's
came out
saying.
the wrong angle. Yeah. I was thinking of making like an
Yeah,
efficiency
that
argument from
was
the
what I was
O1
thinking.
thing, but yeah. I mean, I'll just go like the idea would be yes, if you because if you stop having new models having so for example GPT what is it like 5.0 whatever the fuck they make, if that doesn't get made, or like you don't have a new Grok model and you just have the same models that we have now and that's all we have, the amount of like, I mean, don't get me wrong, you'll need more GPUs but you won't need any like anywhere near the amount of like that we're
Right.
like forecasting now. Yes.
Which is a big deal for a bubble, for sure.
100%, but the bubble, you have to
And my
remember,
biggest
right?
concern
Whenever
too,
you
on
say
top of go
bubble
ahead.
is all based on financial, it's all based on financial dislocation from reality, right? But if the
Yeah.
financials aren't dislocated from reality, that's not a bubble. So
But what
if
if they
Microsoft,
are, is my question. It's like if they are, in the sense that demand in the future doesn't continue as they think it was, is that
right, but that's
AI
not a
models
good
get
argument
more.
because
No,
you could say that about anyone, right? Because like it's about having realistic
is it more realistic that
evaluations.
demand continues infinitely and AI models require more and more and more and more forever? Or is it more realistic that
No,
we'll
no,
get
no.
more
It's not
efficient and
whether or
try to
not
save our utility resources, which we
it's
know
not
are probably going to be the number one issue?
Wait,
it's
hold
not
on. Wait,
whether or
I
not
just want to
it's
explain something
realistic.
real quick. Hold on, because when people think about bubbles and people think about this stuff, they think about you think about an effect that'll happen, but the timing part is really important. Imagine you have a person in 1950 and he says, "I have this groundbreaking theory that in the future Excel and computers are going to exist, and therefore you're not going to need a whole room full of secretaries to organize paperwork. You can do all of it on a computer. Therefore, since I know that's going to be the case, I'm not going to hire a single person to work in office. I'm going to wait for Excel to be invented." The person is right, and that will happen. But in the meantime, their business will collapse because they're not going to have anybody to do any of the work. So there can be a bubble, or it might be in the future that workloads, change in some way. But if you adjust your business right now to that hypothetical future environment that you don't know when it's going to happen, then you would just go bankrupt. So you have to kind of keep up with where the reality is in the future while trying to price in future expectations, right?
I agree.
So then
I
your
guess
argument, or
my
the difference
point
between
is,
you and Metalloid right now is you're making the argument that right now, and this is one of it's basically one of magnitude that you guys have to resolve. You're making the argument that right now the market is severely incorrect in its current expectations for what the future will look like. And Metalloid is saying that the market is not nearly as off as it seems, that there are real revenues to be accounted for in the current pricings of things, and that like if future workloads get more efficient or if something changes, then yeah, the stock will go down a little bit, but it's not going to be like a catastrophic economic event. That's the difference in opinion right now.
yeah, I can talk on this a little bit too, but I'm happy to be wrong again. Another thing too, if
Well,
we're
wait, Metalloid, do you agree that these are your guys' differences?
yeah.
Right? Or,
I would, yeah, reasonably, yeah. The idea is that he thinks a lot of the market is built up on this AI growth thing, and I'm trying to tell him that it's a very small part of the
Not AI
market
growth?
that is built up on it.
We're not built up on AI growth, like primarily even, especially for in the case of
Like
Nvidia
most
and
of the,
Tesla.
yeah, I think the funny thing is like
wait, without getting into some example. So yes, this is back to your fundamental disagreement. Okay, we're gonna play a game, okay, real quick, okay. What percentage of the current valuation of the overall AI market, as much as you could quantify it, okay, don't say a number yet, okay, what percentage of it do you think is built on hypothetical future technologies or things that don't exist yet? Okay, so what percentage of the current value of the total AI market, everything that encompasses, is based on future things that don't exist yet, future technologies or whatever don't exist? Okay, on 3, I want you guys to say a percentage, okay, between 1 and 100.
We have the AI market or the whole market?
Everything that is involved in all the AI bullshit, all of it, okay?
Percent, okay.
Okay, do you have, tell me when you both have a number in mind, all
I have a
right?
number.
Yeah.
Okay, ready? 3, 2, 1, go.
80%.
30%.
What did you say, Metalloid?
30.
Yeah, okay. So this is your fundamental disagreement, okay? So he said 80%. He thinks the vast majority of this market, this is why he's saying there's going to be a huge bubble pop. And Metalloid thinks that it's not really that much at all. There's some percentage, and if it's
Even
not
30% though is quite high in some ways.
I mean, yeah,
sure,
that
but it's
could still be a
significantly
bubble
different,
pop,
right?
It
It would
is
be
a significant difference.
yeah. It would be a pop, and there would be a pain, maybe even like a mini recession or whatever. But Jake, your original claim was that it was going to be like 2007, 2008 plus whatever, the .com bubble, right?
Plus.com, yeah.
Yeah.
Plus.com,
Okay.
yeah.
The biggest, like as I said before, the biggest reason why it's not 80%, like the biggest by far, is these
Mm.
companies aren't building supply to no one. They are building supply to current demand. So they have like large companies like S&P 500 companies coming to them, or other hyperscalers, right? Like ByteDance might be using, because of the regulation rules, which I've been trying to get Destiny to look at for a while. The regulation rules that Biden introduced, the air
Mm.
diffusion rules, they've actually forced foreign companies to use inference run by American hyperscalers. So there's now an argument that large foreign companies have to use American companies like infrastructure to run their models, not train them. Well, they're also trained, but run them primarily, right?
Mhm.
So the biggest reason why it's not 80% is because they're building to demand. A company comes to them, they want more, like, they want to be able to run more fucking, I don't know, GPTs, or like they want to be able to, it's usually marketing or like stuff like that, right? They're trying new things, and they want to run more. And the Microsoft, Amazon, Google, they don't have enough capacity to actually supply this, so they're building
Right.
more demand for that stuff. That's why it's not 80%, because even if these models stop getting made, the companies already want the infrastructure to be able to run the current models and that stuff.
I
They
understand
can't
that.
because they don't have their own capabilities.
Okay, I kind of understand that, but I guess I think there's more fundamental issues too, and not to disagree with your point. I think your point is valid, but I think there's a lot more struggle and overarching issues in the economy that will inhibit those growths just in general. So, like for example, if we are about to go into a recession, which I think it's very clear we likely will, if like
I think it's
man-made or
very
not.
clear.
Yeah, it's very clear we'll go through a recession here. Very clear.
To be
Especially if
clear,
Donald Trump
you know that
actually
like
goes forward with his tariff policies.
you know that it's like one of the most fraught thing to do is try and predict a recession, right? You're like saying that you're smarter than
Oh,
everyone
okay.
else.
Okay.
No,
Well,
no,
I
I'm
mean,
just asking you a
uh,
question. Do you realize that it's not like a rhetorical "you're an idiot"? I'm asking you, do you realize that like throughout history, there have been
mm,
people that thought they have called recessions, they're so obvious and stuff like that, and then they've been completely wrong. Like resilience, the economy have happened, like something happened and they were completely
yeah,
wrong.
yeah,
You
yeah.
realize that, right?
The best part is I actually think there's almost no way we can't go through a recession in some ways, especially with the with the essentially political sabotage in some ways.
Okay,
Like
what's the
tariffs,
wait?
for example, we do not go through 20% tariff with essentially all of our trading allies and not go through a recession of some sorts.
Before we do this, wait, Destiny, do you want to move on to this? Because you were like pushing like us keeping to the before and
I'm
like
just making sure
resolve
that if
that.
you have a fundamental disagreement, you guys don't just talk past it like nothing ever happened. When it's like
Okay.
important that you resolve that. So, but go ahead. You're at
Okay,
least
so if we're gonna go into recession stuff, what's your
Mm.
like biggest reason why we're gonna go into recession?
I think American consumers are very, very stretched thin. Like, there's no more consumption that can even be had without fundamental decreases in inflationary pressure, especially the bottom half of consumers. Like, the bottom half of consumers cannot consume anymore. Like,
Okay,
we
how
have
do
a
you
record high debt and record high delinquencies. Not record highs and never before, but like we're just going up in delinquencies and up in debt for the average person.
okay? What's your like? So you mentioned record high delinquencies and record high debt.
Mm.
Um, what's your barometers for those things? Like, what
Barometers?
shows you that there's yeah? Like, what do you look at to tell you that debt is record high and or the delinquencies are record high? Like, what do you look at to see that?
I'm a big fan of the Fred or whatever economic data from Fred.
Yeah, that's
Like
just
if
an
you look at,
aggregator. It's
yeah,
not
but
like
if you look at some things like savings rates and velocity of money, I think it's very interesting to see like essentially when we
right.
print money, we don't see velocity of money increase. We really see debt and
Mhm.
savings be attacked first. So my thoughts are that means a lot of people, when they are given money right now, don't actually consume more. They just pay off their debts. And if they're not given that money, that debt accrues, right? Credit
Wait.
cards
You're saying that?
accrue.
Wait. Sorry. Can you say it again? You're saying what part distinguishes them paying down debt? Sorry. You said savings rate and something.
Yeah. So like when we, for example, in COVID, when we locked down the economy and we gave stimulus to a bunch of people, we didn't actually see a fuck ton of growth. We saw most of that money being used to essentially live and pay down debt. It didn't actually circulate through the economy. Like velocity of money never went up when we gave away free money.
How do you determine velocity of money?
That's something we can look at.
Okay. Okay. So
Fred has them.
the um
Let me
Okay,
let me
so
shade this a little bit. I don't know how much this will matter to the conversation. So I think that you're largely correct, Jake, but I don't think if it's because of necessarily the reason you're saying. I think one of the reasons why money went into savings and paying down debt was because a lot of services that people would traditionally spend their money on for consumption were just closed. Like you couldn't go out to eat because there were no restaurants open. You couldn't go out and spend your money like at movie theaters or whatever because it was closed. So then the money
Right.
did end up going to paying down. Yeah, but I don't know if that was because of some fundamental change in the economy or people were over encumbered by debt. They just had nothing to spend their money on.
I kind of agree with you, and especially when you look at what they were forced to use. So like a lot of they ended up consuming a lot of tech stuff. Amazon was a big, beneficiary, DoorDash, whatever you might have it. It's interesting to think that essentially Amazon and let's say Facebook and Meta, like they had the best chance ever for growth during COVID because it was the point of time where most people were locked down. Like if you think about it, Twitch, for example, will probably never go back to its lockdown potential in some ways. I mean, it might stay around it, but that was like the best chance for it to truly peak or further grow.
Okay.
And I don't think we've ever really seen Twitch bounce back from lockdowns. So I guess I'm saying in some ways lockdowns were like tech's best chance to fully capitalize on everything. And now that we're out of lockdowns, it has not been more. There's not been more opportunity for tech to have an even better chance. Really, it's more of a chance for us to go outside, spend in small businesses, not use Amazon, not watch Twitch, not use YouTube, not watch Instagram, because we have more chance to just go outside and have fun or whatever. And not that we always do that, but I really think that was tech's best chance to really have their last hurrah in terms of revenue, in terms of acquisitions and consumer growth
Okay.
for them.
Do you understand that, Metaloid? What are you saying?
yeah, I do. I wasn't really connected to the
I wasn't
other
connected.
things.
I think we're more just chatting
Okay,
about
okay, go for it. Okay, back to whatever you want to talk about then. Go ahead.
Posted some charts in chat if you want to pull them up, but to like context wise. But
it. Yeah,
oh wait, I need to post them in Discord as well. Dumb.
yeah, I'd like to see them. By the way, I'm happy to be wrong. I'm not saying I know everything. I'm just saying I think there's a lot of evidence that we are in a bubble because we're predicting so much growth that if even we have any economic strain right now coming up, then we won't hit our growth targets. And I think it's very likely we're going to have a lot of economic strain. And some companies are definitely just going to bust entirely. Like there is no way Tesla makes it out of this. No,
I would
fucking
again
chance.
caution that I would say Tesla is a very unique
It is a
thing
unique
that
thing,
I wouldn't
but
like.
I'm just saying, like, I don't think we need very much dominoes to push pressure down in a negative way, not a positive one. And Tesla is like the biggest fucking meme ever, right?
I could be wrong, but I personally, and I'm just a little finance retarded here. I don't think Tesla is a domino at all. I just don't think that
It
they're
is in
connected.
AI.
Is Tesla like a huge?
It is an AI, yes. That is why NVIDIA talks a lot about self-driving and how GM is now going to do self-driving and Tesla's doing self-driving and self-driving.
Is self-driving really
self-driving.
like our big AI driver right now? Is that what?
No, it's just one of those things that everyone loves to talk about for growth in the future. But yeah, I guess it might not be the domino, but it is a domino. It might be the smallest one, but it doesn't take very much to not hit growth expectations.
I guess
Like
in my mind, like I'm just what I'm trying to say in terms of like understanding like
Twitter,
the
right?
yeah, in
XAI,
terms of
right?
my understanding of like the markets, like if Tesla were to disappear, like completely and utterly go to zero, I just don't know if it would even have that much of an impact on the rest of the market.
It would, is what I'm saying. Especially if it does impact Twitter and XAI. Like that is a big
Well,
potential
Twitter is
consumer
off the market now, right? So Twitter has no
Yes,
impact there. I don't
yes.
know for XAI is also
we know
private.
Elon's probably financing that with loans collateralized by Tesla's value.
Yeah, but this is all like just Elon's shit, right? Like I think
Yeah.
like
I'm just saying, like, if a big domino falls here, it does matter, even if it's the most memey domino. You know,
Well, I
like
think
one
domino-
domino
I think-
falling in a bubble
Yeah, I think-
is
well,
a big
well-
deal. Like the first internet company to go bankrupt in the dot-com bubble is a big realization, especially a massive one like Tesla.
Yeah, but I think that when you look at dominoes, I think the thing you're looking for is like the interconnectivity. So like the scary thing about the 2007 stuff is those were dominoes that when houses started to become impossible to build, it knocked over the ability for banks to sell mortgages, which knocked over the ability for investment banks to buy mortgages, which knocked down the ability for people to form MBSs, which knocked down the ability for people to form CDOs, which knocked down and then it goes all through the cycle. And then this is what like creates a feedback loop that causes like a catastrophic change in the market. But if Tesla goes away, like it's not like NVIDIA demand is going anywhere. It's not like
AI.
Amazon is.
No,
Okay.
it is though. That's what I'm saying.
It
But
might be.
maybe
I
I'm
don't know.
wrong actually. Maybe Metaloid knows if I'm wrong on this one. Like, do you think that Tesla can just disappear and potentially it not be a big deal for AI at all? Like, or I guess like I don't think
Uh,
it's catastrophic, but it's definitely an impactor, in my opinion.
Tesla is not a massive realistically. You want hyperscalers is all that matters, and Tesla. Well, I mean, you could call them one, but like I mean, hyperscaler like cloud providers are who you care
Mm.
about for AI demand. That's basically the largest single factor. They are more or less like 80 to 70%
But
of all
isn't
money
like
spent.
self-driving a big it's a big speculator in this, no?
Yeah, but it's all
Like if
training.
Tesla
Like for
go,
example,
mm,
when you make a you know how everyone was talking about how we're gonna like have massive cloud servers to run all of the stuff that you're gonna have on your phone and you'll like ping it to your phone. That's like
yeah,
the argument you would use for like FSD. But the reality is what you're gonna have is you're gonna have massive training centers for like FSD, and then you'll have onboard compute that actually
yeah,
does the
yeah.
FSD.
I
That
get that.
means that the
But
actual amount of
we're not
compute you
at
need is really
FSD
low.
yet, right?
No, but
Like
I'm saying
so
that's what it will be. You will never
right,
have a
right,
point where
right.
you have
I know.
massive
Sorry,
servers.
sorry. I agree with you. I agree with what you're saying. But I'm saying like if we lose a big player in someone who's trying to race forward FSD, you're like,
They're not a big player though.
they're a big player in FSD though, right?
Oh yeah, but AI,
What I'm
it's
saying,
not generative AI.
full self-driving isn't generative AI.
Like the new boom of like LLMs and providing enterprise software for
Is it
marketing
kind
and
of
stuff
like
like
the
that.
ultimate one, like in the sense that when you train it and then you can use that data, it's like the ultimate decider of decisions in some ways, right? Like AI and self-driving, I think is a very interesting concept. And I feel like if you lose a big player in the self-driving space, you do lose
Okay,
a big
wait. Hold on,
consumer
hold
of
on. Here's
AI
another
products.
fundamental thing because I don't think I even agree with this. So I'm just curious because of my
Yeah.
intuitions or whatever. So in my mind, self-driving is like accounting for like less than 5%, if that, of like the total demand in the AI market. I feel like AI stuff is being used for way more.
I
Yeah,
disagree.
Yeah, I know. Yeah, but so
but
then what are you?
it
So
is less than
Metalloid, where are
five
you at on
percent.
that?
The only reason why I
It is
disagree,
less
real
than
quick,
5%. Yeah, like there is
well,
millions and millions of GPUs being sold. Tesla has like 50,000.
Okay, so you
how
guys need to resolve that difference. Yeah.
I mean, it's
Tesla
you can look.
Tesla slash X. I know they're not the same, but how much is like Elon's personal market share of GPU compute power? Do you know, like roughly?
Hey, can you say that again? Sorry.
Like what I'm not gonna like let's combine Tesla and AI or XAI in some ways, just because they're both Elon's products. What percent of like GPU market share does Elon control slash want slash need? Do you know roughly?
XI has around 200,000. They're primarily doing but themselves they have around 200,000 in their Memphis plant. I
Mm.
think they have another one as well, but they probably don't have more than like 220 to 230,000 because they do most of their inference through cloud providers, I think.
And then
So
there's like the Dojo or whatever for Tesla, right?
Tesla is the 50,000 Cortex one, I think. Yeah,
It was like 250,
around
250,000 GPUs.
250. Yeah,
What percent of market share would that be for like Nvidia's customers? Is it like a
not
like
that much.
10% or
But
less?
it's a decent amount, like in a quarter. But over time, it's not that much. Like Microsoft,
Yeah.
Google, Amazon, and stuff are ordering like 50,000.
Per
Um,
quarter?
no, actually, well, they're ordering like they have this. Although I can't. The numbers change like every quarter, and I forgot them. But like they have around like 500,000 to like 700,000, purely like for their own like sources, and then they'll build out for inference. I think it's around like. Well, that would also be inference. It's around 200,000. Yeah, so around 800,000, I think. I think would be the number. But then the problem is like Google has TPU,
Mm.
and they have much more TPU than they do have GPUs because they pretty much only use NVIDIA for training because it's better for training, and TPU is more cost efficient for them for inference.
Do you
So yeah,
think
it would be around like 5 to 10%. If you
of
included
okay.
XAI, it's a decent amount because they
Let's
are the
include
biggest
XAI
one
because I
right
think Elon is, in my opinion, is the problem in some ways, not Tesla.
If
Like
you
Tesla
include XAI,
will
I
be our
think it's like
first
15 to
domino.
20%.
15 to 20%. Okay, so 20% of GPU demand is Elon.
Well, no, not demand. I mean the current market share. You used to ask for
Okay,
that.
sorry. But what percent of like future growth would Elon be worth too? Do you like
No,
again? I know these are very like I don't expect actual numbers. I'm just more like curious what you think. And
the
where I'm
problem
going
is
with
with
this is like, go ahead.
when you're asking for growth like that. So the biggest growth drivers of like demand for GPUs are going to be the cloud providers because they are building out a platform for more consumption, right?
Mm,
Consumption is that, as I said before, 90% is inference, right? So when it comes to the actual just raw numbers, it's going to be them mostly, right? Training you, unless we start doing like million, we're going to have million like GPU training centers, right? But it's going to be
Mhm.
like probably Google because they're going to use some TPU alongside it. But it's not going to be Grok that's going to be like any more
Sure,
than
sure, sure.
10% of future demand.
I kind of agree with this, but I think my biggest concern is if we don't need as much GPUs as we think, and we lose a single major player now. Let's say Tesla does go bankrupt, or maybe even XAI on top of that. That's a lot of GPU market share that they can just buy up, right? Like if XAI goes down and Tesla goes down, then this is a bunch of compute that can be purchased by someone else, right? Like in a
Uh,
bankruptcy. Like that would be a big increase in
yeah.
supply. Like that would be like a 20% increase in supply instantly, which is a big deal. But also now we don't have any future demand from them either. So if Tesla goes down, we better hope XAI doesn't go down. That's like the first domino is where I'm saying, or where I'm going with it. It might not be an immediate impactor, but I think that plus training and utilization of our current GPUs getting better would be a big blow for NVIDIA, like a massive one.
We've already done this argument though. Can we go
Yeah,
to
we have.
the recession one? That one's much more interesting than
The
doing
recession one is
AI. And
interesting, yeah. So I guess I'm concerned that the average American consumer can no longer consume. Like we see massive amounts of products that allow for a higher consumption rate, and it doesn't seem to me like consumption can go on forever. We see a ton of, I guess, the first dominoes in terms of recession, like Nike missing earnings is a very interesting one. And I just don't see how I see risk in the consumer base in general. And we already see consumer sentiment dropping overall. And I don't think it gets better with the behaviors that are going on right now around us. So if we do go through a recession, I feel like our growth targets are going to be way off no matter what. So it's a bit of a concern. You're definitely going to slow down on some of our growth if we go into a major recession. And I don't think we can do these tariff implications either, or tariffing our direct allies without job losses and again inflationary pressure and again consumer confidence being dropped and all this stuff. Like it's just all connected, and I don't see how we avoid a recession if they do actually implement some of these tariff policies.
okay, so one of the
That was
key
my thought.
things in calling recession that people make a mistake on is they see a few like uh instruments or quote unquote indicators that don't actually have much like signal value. So
Mm-hmm.
you brought up some things like delinquency, credit
Mm-hmm.
card volume, and stuff like that. I'm going to address those first because it's the easiest ones
Sounds
to
good.
address. The key things people make mistake with when they talk about interest rates effects on like consumer credit cards or like delinquencies is they are actually an incredibly small portion of the economy. Like when I say
Mm-hmm.
that credit card, the actual raw revolving credit card like a number is like 0.004% of all assets owned, right? Or
Mm-hmm.
assets of households, not companies, households, right? So it's incredibly small. Okay, so the leverage is ridiculously small. And
Hold on,
the other
wait.
thing is
Let
the thing
me
with
speak real quick. I'm sorry.
yeah.
I just want to hear you flesh that out more because so Jake is saying that credit cards account for a very, very small amount of spending in the overall market. So if credit card delinquencies go up, that's not a huge deal because it's not even that much of the overall spending. But the counter argument to that, I believe, would be, yeah, that's true. But like, let's say that I tell you, hey, this person has a loan and they're late on the loan and they can't pay it, and the loan is for $5. You probably wouldn't assume, okay, well, that's not a problem. That's super easy. They just have to get $5 and they can pay for it. What you would say is, oh, this guy is financially fucked because he's delinquent on a $5 loan. So the question would be, how or why would that mean that, or you have to give a better argument for why credit card delinquency rates aren't a signaler for a decrease in consumer confidence and everything
Oh, I
else.
was going to do that. Yeah, that was what I was going
Okay,
to move
well,
on
then you
to when I
shouldn't waste
talk
the time
about.
on your current bullshit argument saying it was a small percentage of the argument, okay? Fuck you. My dick is a small percentage of my body. It's a huge percentage of what I put in your mom's mouth. So go.